Based on the provided data for Bitcoin, a short-term investment strategy appears to be the most suitable approach. The recent price history demonstrates volatility, with fluctuations both upwards and downwards. The forecast price suggests a downward trend over the coming week, indicating a potential opportunity to capitalize on a short position. Therefore, the suggested strategy is to initiate a short position at the current market price of $94,200. A stop-loss order should be placed at $96,900 to limit potential losses if the price unexpectedly rises. The target price for this short position is set at $91,152, which represents a significant support level identified in the data. This strategy aims to profit from the anticipated downward movement in Bitcoin price within the next week, while the stop-loss order safeguards against excessive risk. Based on the provided price information for Bitcoin Cash, a bearish investment strategy is recommended for a short-term perspective. The 2-week price change exhibits a downward trend, and the forecast predicts further declines, suggesting a potential opportunity to profit from the anticipated price drop. The current price is relatively close to the resistance level, indicating a possible exhaustion of upward momentum. Therefore, a short position should be taken with an entry price near the resistance level of $437.50. The stop-loss should be placed slightly above the entry price at $441 to limit potential losses. The target price should be set at $404, aligning with the lowest predicted price in the forecast, allowing for a reasonable profit margin. This strategy aims to capitalize on the bearish sentiment and potential price decline in the short term, taking advantage of the existing downward trend and the forecast's predictions. Based on the provided price information for stacks, a cautious short-term investment strategy appears most suitable. The historical price data shows a recent downward trend, with the 2-week price change indicating a decline. The forecast price further suggests a continued downward movement over the next week, potentially reaching as low as $1.28. Therefore, a short position on stacks is recommended. An entry price of $1.54, aligning with the current price, would be appropriate. The stop-loss should be set at $1.58 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $1.42, the support price, aiming to capture a portion of the anticipated decline. This strategy prioritizes risk management by establishing a clear stop-loss level while capitalizing on the bearish outlook suggested by the price data and forecast. Given the current price trends and forecast for Ethereum, a cautious investment strategy would focus on a short to medium-term approach. The historical prices demonstrate a recent peak followed by a notable decline, suggesting a potential correction phase. The forecast indicates further downward movement, with prices potentially reaching below the current support level of $3,069.17. This bearish outlook, coupled with the proximity to the support level, suggests a higher risk of further price drops. Therefore, a short position is recommended to capitalize on the anticipated decline in Ethereum. An aggressive entry price could be around $3,340, aligning with the recent resistance level and the current market sentiment. The stop-loss should be set at $3,400 to mitigate potential losses if the price unexpectedly reverses. The target price could be set at $3,000, aiming to profit from a significant portion of the forecasted decline while staying cautious of the potential for further drops. This strategy allows for a balance between risk and reward, aiming to capitalize on the bearish trend while minimizing potential losses. Given the price trends and forecast for Ripple, a cautious investment strategy would focus on a medium-term approach. The historical prices show some volatility, with a recent upward trend, but the forecast suggests a slight decline in the coming week. While the current price is near the support level of $1.5351, the resistance level of $2.3385 indicates potential for further growth. Therefore, a long position could be considered for a medium-term investment strategy. An entry price of $2.20 would allow you to buy in at a relatively attractive price point, with a stop-loss set at $2.10 to mitigate risk. The target price should be set at $2.35, aiming to capture some of the potential upside before the forecast suggests a decline. This strategy balances the risk of a short-term correction with the potential for medium-term gains as Ripple recovers and potentially surpasses the resistance level. Based on the provided information for Binance Coin, a cautious investment strategy is recommended due to the recent price volatility and the downward trend in the forecast. The current price is hovering near the support level of $612.55, indicating potential vulnerability to further declines. While the historical price data shows some upward movement, the forecast suggests a continued downward trajectory, with prices potentially dropping below the support level. This bearish outlook warrants a short-term approach to mitigate risk. Therefore, a short position on Binance Coin is advisable. An entry price around $695, close to the current price and slightly above the support level, allows for a quick entry into the market. The stop loss should be set at $705.87, the resistance level, to protect against any unexpected upward price movement. The target price should be set at $685, slightly above the support level, aiming to capture potential downward momentum before the price reaches major support. This strategy allows for a relatively quick trade with a limited risk profile, capitalizing on the anticipated downward price movement in the short term. Given the price trends and forecast for Stellar, a medium-term investment strategy appears to be the most suitable approach. The historical prices show some volatility but generally trend upwards, with the recent price action indicating a potential consolidation phase. The forecast also suggests a slight upward movement in the coming week, with the price potentially reaching around $0.402. Therefore, a long position on Stellar is recommended for a medium-term investment horizon. An entry price of $0.392, which is slightly below the current price, would allow you to buy at a potentially discounted rate. The stop loss should be set at $0.3497, the support price, to limit potential downside risk. The target price could be set at $0.419, the resistance price, aiming to capitalize on the potential upward movement. This strategy allows you to participate in the potential upside while managing risk through a well-defined stop loss. Remember that this is just a suggestion, and it's essential to conduct thorough research and consider your own risk tolerance before making any investment decisions. Given the price trends and forecast for Toncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, and the forecast predicts further declines. The current price is hovering near the support level of $4.678, indicating a potential for further downward movement. The resistance at $5.516 suggests that a significant upward reversal is unlikely in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $5.35, aligning with the forecasted price, would be suitable. The stop loss should be set at $5.45 to protect against any unexpected price recovery. The target price should be set at $4.70, slightly above the support level, allowing you to take profits before the market potentially bounces back. The historical price of Cardano shows both upward and downward fluctuations. While the recent price action suggests a slight dip, the forecast price indicates a potential rebound in the coming weeks. Considering the support price of $0.8635 and the forecast suggesting prices could rise to $0.968, a long-term investment strategy appears promising. Therefore, I recommend a long position on Cardano. An entry price around 87 cents would allow you to buy at a price slightly above the recent dip and below the predicted price increase. Setting a stop loss at 85 cents would help mitigate potential losses if the price drops further. A target price of 98 cents would allow you to capitalize on the potential upside movement, aiming for a profit of around 12%. This strategy takes advantage of the potential for Cardano to recover and surpass its recent highs. Based on the provided data for Litecoin, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a recent upward trend, but the forecast indicates a potential correction in the coming week. This suggests a window of opportunity to enter a short position, aiming to capitalize on the anticipated price decline. Considering the price information, an aggressive short-term investment strategy could involve entering a short position at $102, aligning with the current price and slightly above the support level. The stop loss should be set at $103, protecting against any unexpected upward price movement. The target price could be set at $98, aiming to capture a potential profit from the price correction while staying below the support level. This strategy takes advantage of the short-term price fluctuation and aims to generate quick returns within a week. Given the price trends and forecast for Doge-Coin, a medium-term investment strategy focusing on a long position seems prudent. The historical prices show a general upward trajectory, with recent fluctuations suggesting consolidation before a potential upward break. The forecast predicts a continued upward movement, with prices potentially reaching $4.92 in the short term and stabilizing around $4.82 in the medium term. The support price of $4.7175 provides a safety net, while the resistance level of $4.9794 indicates the potential for further gains. Therefore, a suitable strategy would involve entering a long position at the current price around $4.81. The stop loss can be set at $4.7175, ensuring minimal risk in case of a sudden price drop. The target price can be set at $4.9794, aiming to capitalize on the potential upward momentum towards the resistance level. This strategy allows for potential profits while mitigating risk through a well-defined stop loss. The medium-term perspective aligns with the forecast, suggesting a steady upward trend for Doge-Coin. Given the price trends and forecast for Aptos, a cautious investment strategy would focus on a short-term approach. The historical prices show a volatile pattern with recent fluctuations around the $9 mark. The forecast indicates a potential decline in the coming weeks, suggesting a bearish outlook in the short term. The support price sits at $8.07, which could act as a potential buying opportunity if the price drops to that level. However, the resistance price is at $10.16, indicating that a significant upward move is unlikely in the near future. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $9.20, slightly above the current price, would allow for a margin of safety. The stop loss should be set at $9.50 to protect against any unexpected price surges. The target price could be set at $8.20, aligning with the forecasted price decline and allowing for a reasonable profit margin. This strategy emphasizes risk management by utilizing a stop loss and aims to profit from the anticipated downward price movement of Aptos in the short term. Given the price trends and forecast for SE, a conservative investment strategy would focus on a short-term approach to manage risk. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests SE could drop from its current price to as low as $0.311, while the support price sits at $0.3377 and resistance at $0.4076. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.400 would be ideal, aligning with the forecasted price. The stop loss should be set at $0.414 to protect against any unexpected price recovery. The target price should be set at $0.350, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.3377. This strategy aims to profit from the anticipated downward movement while limiting potential losses. The Ethereum Classic price history shows a recent decline, with the forecast suggesting further decreases in the coming weeks. The current price is hovering near its support level, indicating a potential for a temporary bounce. However, the overall bearish trend and the forecast's downward trajectory suggest a greater likelihood of continued price decline. Therefore, an investment strategy focusing on a short position appears more suitable. Entering a short position at the current price of $25 would allow for capturing potential downward momentum. The stop loss should be set slightly above the current price at $26 to minimize risk in case of an unexpected upward surge. The target price could be set at $22, aligning with the forecast's lowest predicted price, allowing for profit-taking before the price potentially reaches its support level. This strategy prioritizes a short-term perspective, aiming to capitalize on the anticipated price decline in the coming weeks. Given the price trends and forecast for Polygon, a cautious investment strategy would focus on a short-term approach. The historical prices show a mixed trend with recent downward movement, while the forecast indicates further declines. The support price at $0.4276 and resistance at $0.4779 highlight a range-bound movement with a potential for further downside. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.463, aligned with the forecast, would be suitable. The stop loss should be placed at $0.4779, just above the resistance level, to limit potential losses. The target price should be set at $0.4276, aligning with the support level, allowing for potential profits before the market reaches major support. Based on the provided information for AEVO, a short-term bearish investment strategy appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, culminating in a significant drop towards the end. The forecast further reinforces this bearish outlook, projecting a continued decline in price over the next week. Considering these factors, an entry price of $0.355, aligning with the recent low, would be appropriate for a short position. A stop-loss order should be placed at $0.364, slightly above the entry price, to limit potential losses. The target price could be set at $0.2922, the identified support price, aiming to capitalize on the projected price decline. This strategy capitalizes on the current bearish momentum and aims to profit from the anticipated further drop in AEVO's price. Based on the provided optimism price history and forecast, a cautious investment strategy with a medium-term perspective appears most suitable. The historical data reveals a fluctuating price trend, with recent price dips suggesting potential bearish momentum. The forecast further reinforces this bearish outlook, projecting a continued decline over the next week. Given these trends, a short position seems more advantageous. Considering the price information, an entry price of $1.82 would allow you to enter the market near the recent price dip. A stop loss at $1.89 would protect your investment from unexpected price surges, while a target price of $1.65, aligned with the forecast's lowest point, offers a realistic profit potential. This strategy allows you to capitalize on the anticipated price decline while mitigating risk through a well-defined stop loss. Based on the provided historical price data and forecast for STRK, a cautious short-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating trend, with recent dips suggesting a potential bearish momentum. The forecast further reinforces this bearish outlook, projecting a decline in price over the next week. Considering this, a short position on STRK would be advisable. An entry price of $0.465 could be considered, slightly below the recent price action and above the support price of $0.348. A stop-loss order at $0.485 would help mitigate potential losses if the price unexpectedly rebounds. The target price could be set at $0.400, aiming to capitalize on the forecasted price decline while staying above the support level. This strategy prioritizes risk management and capitalizes on the potential for short-term price movement. Given the historical price data and the one-week forecast for Solana, a short-term investment strategy appears to be the most suitable approach. The historical price shows a recent upward trend, reaching a peak of $218 before experiencing a decline. The forecast indicates a further downward trend, with prices potentially dropping to around $182 within the next week. This suggests a bearish outlook in the short term, making a short position a potentially profitable strategy. To execute this strategy, an entry price of $197 could be considered, aligning with the current price and the forecast. A stop loss could be set at $202, slightly above the current price, to protect against any unexpected upward movement. The target price could be set at $182, aligning with the forecasted lowest price, allowing you to capitalize on the anticipated decline. This short-term strategy aims to profit from the predicted price drop within the next week, taking advantage of the bearish outlook suggested by the historical data and the forecast. Given the price trends and forecast for Jupiter, a short-term investment strategy focusing on a short position appears to be the most suitable. The historical price data shows a consistent upward trend, but the forecast indicates a downward movement over the next week. The price is currently near its resistance level, suggesting a potential for a pullback. Entering a short position at $0.859, the current price, allows you to capitalize on this anticipated decline. To manage risk, a stop loss should be set at $0.8993, the resistance level, to limit potential losses if the price unexpectedly moves higher. The target price should be set at $0.7273, the support level, aiming to capture a significant portion of the potential price decline. This strategy takes advantage of the short-term bearish outlook suggested by the forecast while mitigating risk with a well-defined stop loss. Based on the provided price information for Render, a short-term investment strategy appears to be the most suitable approach. The 2-week price history shows a fluctuating pattern with a slight downward trend. The forecast price indicates a continued decline over the next week, suggesting a bearish outlook in the short term. Given this outlook, a short position on Render is advisable. An ideal entry price would be around $7.15, slightly above the current price and near the resistance level. This allows for a potential profit if the price moves down towards the forecast price. The stop loss should be set at $7.40, protecting against unexpected upward movement. The target price could be around $6.70, aligning with the projected price decline and providing a reasonable profit margin. This strategy capitalizes on the anticipated short-term price decline while managing risk through a well-defined stop-loss order. Based on the provided Solana name service price information, a short-term bearish investment strategy appears most suitable. The historical price data reveals a downward trend, with recent prices significantly lower than the 2-week high. The forecast also predicts further price declines over the next week, reaching as low as 19 cents. Considering this bearish outlook, a short position would allow investors to capitalize on the anticipated price drop. An ideal entry point for this short-term strategy would be around $0.246, aligning with the current price and the recent dip below the resistance level. The stop loss should be placed at $0.251, slightly above the entry price, to mitigate potential losses if the price unexpectedly rebounds. The target price could be set at $0.2002, the support price, aiming to capture a significant portion of the predicted decline. This strategy prioritizes capital preservation by setting a stop loss and aims for a reasonable profit within a short time frame. Given the provided price history and forecast for Doge-Coin, a cautious investment strategy focusing on the short term seems most appropriate. The recent price action shows a period of consolidation around the 32 cents mark, with the forecast suggesting a potential dip towards the end of the period. The support price of $0.31201 provides a potential floor for the price, while the resistance at $0.36588 indicates a ceiling for potential upward movement. Therefore, a short-term short position is recommended. An entry price around $0.335 could be considered, aligning with the current price and the forecast's initial downward trajectory. A stop loss should be placed at $0.342 to protect against unexpected price surges. The target price could be set at $0.309, taking advantage of the predicted dip while leaving room for potential price fluctuations. This strategy aims to capitalize on the anticipated short-term decline while mitigating risk through a well-defined stop loss. Given the provided price information for PEPE, a cautious approach is recommended due to the recent price volatility and the forecast suggesting a potential downward trend. The historical price data shows fluctuations, but the forecast indicates a decline over the next week. The support price of $0.0000130 offers a potential floor for the price, while the resistance at $0.0000183 suggests an upper limit for the near term. Considering these factors, a short-term investment strategy focusing on a short position appears more suitable. An entry price of $0.0000180, aligning with the recent price action and slightly above the support level, would allow for a potential profit if the forecast holds. A stop-loss order should be placed at $0.0000186 to limit potential losses in case the price unexpectedly rebounds. The target price could be set at $0.0000170, aiming to capitalize on the anticipated decline while leaving room for some price fluctuation. This strategy prioritizes risk management and aims to profit from the short-term price movement based on the available data. Based on the provided SHIB new price information, a cautious investment strategy is recommended. The 2-week price history shows a slight upward trend, but the forecast predicts a consistent decline over the next week. This suggests a potential short-term bearish outlook for SHIB Inu. The current price is hovering near the support level, indicating a possible bounce back. However, the forecast price consistently dips below the current price, implying a higher probability of further decline. Therefore, a short-term short position is advised. An entry price around $0.0000218, slightly above the current price, allows for capturing potential downward movement. The stop loss should be set at $0.0000229 to limit potential losses if the price unexpectedly rises. The target price can be set at $0.0000190, aiming to profit from the predicted price decline while staying above the support level of $0.0000184. This strategy prioritizes risk management and capitalizes on the perceived short-term bearish trend in SHIB Inu. Based on the provided price information for Dog with Hat, a bearish investment strategy is recommended. The 2-week price change demonstrates a downward trend, and the 1-week forecast predicts further declines. The forecast suggests that the price of Dog with Hat could drop from its current level to as low as $1.22. The support price is at $1.50, indicating a potential floor for the price, while the resistance price is at $1.62, suggesting limited upside potential. Therefore, an aggressive short-term investment strategy would involve taking a short position on Dog with Hat. A suitable entry price would be $1.71, aligning with the recent price action and allowing for a margin of safety. The stop-loss order should be placed at $1.83, the highest point in the recent price history, to minimize potential losses if the price unexpectedly rises. The target price could be set at $1.50, aiming to capture a significant portion of the anticipated decline. This strategy capitalizes on the bearish momentum and aims to profit from the expected price drop towards the support level. Based on the provided price history and forecast for Doge-Coin, a short-term bearish strategy appears to be the most suitable. The historical price data shows a downward trend over the past 2 weeks, with the forecast indicating further declines. The price is currently near the resistance level of $0.006215, suggesting a potential for a pullback. Therefore, an aggressive short-term investment strategy would involve taking a short position at the current market price. A stop-loss order should be placed at $0.00642, slightly above the recent high, to limit potential losses. The target price should be set at $0.005644, aligning with the support level. This strategy aims to capitalize on the anticipated price decline and secure profits before the price potentially rebounds. Based on the provided price information for NEAR protocol, a short-term bearish investment strategy is recommended. The 2-week price change shows a downward trend, and the forecast indicates further declines. The historical prices fluctuate around $5, suggesting a possible consolidation period before a potential further drop. The support price at $4.653 indicates a potential floor for the price, while the resistance at $5.548 suggests an unlikely upward movement in the near future. Considering this outlook, a short position on Near Protocol is advisable. An entry price of $5.15, aligned with the recent price action and slightly above the support level, would be suitable. The stop loss should be placed at $5.36, above the recent high and below the resistance, to minimize potential losses. The target price could be set at $4.88, a level below the support price and in line with the forecast, allowing for potential profit taking before the price potentially reaches the support level. The historical price of Internet Computer shows a slight downward trend over the past 2 weeks. The forecast also suggests a continued downward trend in the coming week. Given this bearish outlook, a short-term short position is recommended. An entry price of $10 would allow you to capitalize on the anticipated price decline. The stop loss should be set at $10.20 to protect against unexpected price surges. The target price can be set at $9.50, aiming to profit from the predicted drop while staying above the support price of $9.476. This strategy allows for potential profit in the short term while mitigating risk with a well-defined stop loss. Given the price trends and forecast for Injective, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight upward trajectory, but the forecast indicates a potential decline in the coming week. The current price is near the support price of $19.69, suggesting a potential for a pullback. However, the resistance price of $23.08 indicates that there is still some room for upward movement. Therefore, a short-term long position is advisable to capitalize on the potential for a price increase towards the resistance level. A suitable entry price would be $20.50, aligning with the recent price action and the forecast. The stop loss should be set at $19.70 to protect against any unexpected price decline. The target price should be set at $22.50, allowing for potential profit before the price potentially reverses. This strategy aims to capitalize on the short-term upward momentum while mitigating risk with a well-defined stop loss. BTC's historical price data reveals a volatile trend, with periods of both growth and decline. However, the recent 2-week price change shows a downward trend, and the 1-week forecast predicts further declines. This suggests a bearish outlook for BTC in the short term. Considering the support price at $337.60 and the resistance price at $470.20, a short position seems more suitable for capitalizing on the anticipated price decrease. Therefore, an aggressive short-term investment strategy for BTC would involve entering a short position at the current price, with a stop loss set at $467 to protect against unexpected price surges. The target price could be set at $434, aiming to profit from the predicted decline towards the support level. This strategy leverages the short-term bearish outlook and aims to capitalize on the potential price drop while managing risk through a defined stop loss. Based on the provided price information for THETA network, a cautious investment strategy is recommended. The 2-week price history demonstrates a volatile trend with fluctuations above and below the current price. The forecast indicates a downward trajectory, suggesting a potential decline in the coming week. The support price at $1.87 provides a potential floor for the price, while the resistance at $2.127 acts as an upper limit. Given these factors, a short position is advisable for a medium-term investment perspective. An entry price of $2.10 would allow you to capitalize on the anticipated price decline towards the support level. The stop loss should be set at $2.15 to limit potential losses if the price unexpectedly surges. The target price could be set at $1.95, aiming to profit from a moderate price drop before reaching the support level. This strategy prioritizes risk management while seeking to capitalize on the bearish outlook suggested by the price forecast. Given the price trends and forecast for WorldCoin, a cautious investment strategy focusing on the short term appears most suitable. The historical prices demonstrate a fluctuating pattern, with recent dips suggesting potential for further declines. The forecast predicts a downward trend over the next week, indicating a bearish outlook in the short term. The support price at $2.106 acts as a potential floor, while the resistance at $2.194 suggests limited upside potential. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An entry price of $2.19 would allow for entry near the resistance level, maximizing potential profit if the forecast holds. A stop loss should be placed at $2.23 to protect against unexpected price surges. The target price should be set at $2.07, aligning with the lower end of the forecast and allowing for profit taking before the price potentially reaches the support level. This strategy emphasizes risk management while aiming to capitalize on the short-term bearish outlook for WorldCoin. Given the price trends and forecast for Hooked Protocol, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests Hooked Protocol could drop from its current price to as low as 32 cents. The support price sits at $0.3326, indicating a potential floor for the price. The resistance is at $0.3857, suggesting limited upside potential in the near term. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at $0.379, close to the current price and above the support level. The stop loss should be set at $0.393, the first forecast price, to protect against any unexpected price recovery. The target price should be set at $0.341, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.3326. This strategy aims to capitalize on the short-term bearish momentum while mitigating potential losses. Artificial Superintelligence Alliance shows a recent downward trend with a forecast indicating further declines in the coming week. The historical price data reveals a consistent downward movement, suggesting a bearish sentiment in the market. Given this trend and the forecast, a short position on Artificial Superintelligence Alliance appears to be the most suitable strategy for a short-term investment. To execute this strategy, an entry price of $1.33 could be considered, as it aligns with the current price and offers a slight buffer above the recent lows. The stop loss should be set at $1.394, the resistance level, to limit potential losses in case the price unexpectedly reverses. The target price could be set at $1.228, the support level, allowing for a potential profit of approximately $10% if the forecast holds true. This short-term strategy capitalizes on the anticipated price decline and aims to secure profits before the price potentially rebounds. Given the provided price data and forecast for Polkadot, a cautious investment strategy focusing on a short to medium-term perspective appears most suitable. While the historical prices show some fluctuations, the recent 2-week price change indicates a slight downward trend. The forecast further reinforces this bearish outlook, suggesting Polkadot might continue to decline in the coming week. However, the support price at $5.799 acts as a potential floor, preventing a sharp drop. Therefore, a short position could be considered with an entry price around $6.59, aligning with the resistance level and the forecasted price decline. The stop loss should be set slightly above the entry price at $6.68 to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $5.85, aiming to capture a portion of the anticipated downward movement while staying above the crucial support level. This strategy allows for potential profits from the anticipated price decline while managing risk through a well-defined stop loss. Remember, this is a suggestion based on the provided information and should be further evaluated with your own research and risk tolerance. Filecoin shows a fluctuating price trend over the past 2 weeks. While the historical prices indicate some upward movement, the forecast suggests a downward trend in the coming week. Considering the support price of $4.927 and the resistance price of $5.451, a short-term investment strategy appears appropriate. Therefore, I recommend a short position on Filecoin. An entry price of $5.20 aligns with the current price and the forecast. The stop loss should be set at $5.35 to limit potential losses if the price unexpectedly rises. The target price is $4.80, taking advantage of the predicted downward movement. This strategy capitalizes on the short-term bearish outlook for Filecoin while managing risk through a well-defined stop loss. Given the historical price trend and the provided forecast for conflux, a short-term investment strategy appears to be the most suitable approach. The historical data reveals a fluctuating price with a downward trend in recent weeks. The forecast further suggests a continued decline in price over the next week, reaching as low as $0.128. The support price at $0.1344 indicates a potential floor for the price, while the resistance at $0.1517 suggests limited upside potential. Therefore, an aggressive short-term strategy would involve entering a short position at the current price, around $0.149. A stop-loss order should be placed at $0.1517, slightly above the resistance level, to limit potential losses if the price unexpectedly rises. The target price for this short position would be set at $0.1344, aiming to capture profits as the price moves towards the support level. This strategy capitalizes on the bearish outlook and aims to profit from the anticipated price decline in the short term. Given the price trends and forecast for Ethereum name service, a cautious investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend with a slight downward bias in the recent past. The current price is near its support level, and the forecast suggests further declines in the coming week. This indicates a potential bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $32 would align with the current price and the forecasted price. The stop loss should be set at $33 to protect against any unexpected price recovery. The target price should be set at $30, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $19.65. Given the provided price information for Avalanche, a cautious investment strategy with a medium-term perspective appears most suitable. The 2-week price history shows a period of consolidation and a slight downward trend. The forecast suggests further decline in the coming week, aligning with the recent bearish sentiment. However, the support price of $35.81 indicates a potential floor for the price. Therefore, a long position is not recommended at this time due to the prevailing bearish trend. Instead, a short position could be considered with a target price of $35.50, slightly below the support level, to capitalize on the potential price decline. The entry price should be set at $36.50, allowing for a small buffer above the current price. A stop loss should be placed at $37.20 to limit potential losses if the price unexpectedly rebounds. This strategy aims to capitalize on the short-term downward momentum while mitigating risk by setting a clear stop-loss level. Based on the provided Bitcoin price information, a cautious investment strategy focusing on the short term appears most suitable. The recent 2-week price change shows a fluctuating trend with a slight downward bias. The forecast predicts further declines in the coming week, suggesting a potential for short-term profit from a bearish position. Considering this, a short position on Bitcoin is recommended with an entry price around $0.0469, aligning with the current price and the recent resistance level. The stop loss should be placed at $0.0486, slightly above the recent high, to limit potential losses. The target price should be set at $0.04046, the identified support level, aiming to capitalize on the predicted price decline. This strategy prioritizes risk management while seeking to profit from the anticipated short-term downward movement in Bitcoin. Given the price trends and forecast for PENDLE, a conservative investment strategy would focus on a short-term approach to capitalize on the potential for a slight price increase. The historical prices show a downward trend, with the current price close to its forecast and near the support price of $3.722. The resistance is at $4.013, indicating that there is limited room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price of $3.85, slightly above the support price, would allow you to enter the market with a buffer against immediate price fluctuations. The stop loss should be set at $3.72, aligning with the support price, to minimize potential losses if the price drops. The target price should be set at $4, aiming to capture a portion of the potential price increase before reaching the resistance level. This strategy aims to capitalize on a short-term price bounce while managing risk effectively. Given the price trends and forecast for the sandbox, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a recent upward trend, but the forecast suggests a potential pullback in the coming week. This indicates a short-term opportunity to capitalize on the expected decline in prices. Therefore, an investment strategy focused on a short position is recommended. The entry price should be set at $0.625, allowing for some room above the current price and the forecast's lowest point. The stop loss should be placed at $0.645, safeguarding against unexpected upward price movements. The target price should be set at 58 cents, aiming to capture potential profits as the price moves towards the support level. This strategy allows for a relatively quick entry and exit, maximizing the potential for short-term gains while mitigating risk. Given the price trends and forecast for Decentraland, a short-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a general upward trend, with the current price hovering near the support level of $0.4887. The forecast suggests a slight decline in the coming week, but the price is still expected to remain above the support level. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current market price, around $0.496. A stop-loss order should be placed at $0.4887, the support level, to limit potential losses. The target price could be set at $0.572, the recent high point, aiming to capitalize on the potential for a price increase towards the resistance level of $0.6026. This strategy capitalizes on the potential for a short-term rebound while mitigating risk with a well-defined stop loss. Based on the provided data for ENG Coin, a cautious investment strategy focusing on the short term seems most suitable. The 2-week price change demonstrates a fluctuating trend, with recent dips suggesting a potential bearish momentum. The forecast prices further support this outlook, indicating a continued downward trajectory over the next week. While the support price offers a potential floor, the resistance level is relatively close, limiting the upside potential in the short term. Therefore, a short position on ENG Coin is recommended. An entry price around $0.215 aligns with the current market price and the forecasted decline. A stop-loss order should be placed at 22 cents, slightly above the entry price, to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $0.195, aiming to capture a significant portion of the predicted decline. This strategy prioritizes risk management and capitalizes on the anticipated short-term bearish trend in ENG Coin. Uniswap's price history reveals a recent fluctuation with a peak around $15 and a subsequent decline to $12. The forecast suggests a continued downward trend, with prices potentially reaching $11 in the coming week. Considering this bearish outlook and the price trajectory, a short-term investment strategy focused on a short position seems appropriate. An entry price of $13, aligning with the current price, would allow for capitalizing on the anticipated decline. A stop-loss order at $14 would safeguard against unexpected upward movements, while a target price of $11 would enable profit-taking if the forecast proves accurate. This strategy leverages the potential for short-term price depreciation while mitigating risk through a well-defined stop-loss level. Based on the provided data for Chainlink, the 2-week price change reveals a downward trend, with the forecast indicating further declines. The historical prices show a consistent downward trajectory, with the current price hovering near the support level of $18.63. This suggests a bearish outlook in the short term. Therefore, an aggressive short-term investment strategy would involve taking a short position on Chainlink. An ideal entry price for this strategy would be $20, aligning with the current price and the downward trend. The stop loss should be placed at $21 to protect against any unexpected price surges. The target price should be set at $18, slightly above the support level, allowing for potential profit-taking before Chainlink reaches its major support. This strategy capitalizes on the anticipated decline in price and aims to secure profits within a short time frame. Based on the provided Aave price data, a cautious investment strategy leaning towards a short-term perspective appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, with the forecast projecting further declines in the coming week. This indicates a bearish sentiment in the short term. Therefore, an investment strategy involving a short position on Aave is recommended. A potential entry price could be around $310, aligning with the forecast's lower end and providing some buffer against unexpected price fluctuations. The stop loss should be set at $320 to limit potential losses if the price unexpectedly rallies. The target price could be around $290, aiming to capitalize on the projected price decline while leaving room for market volatility. This strategy prioritizes risk management while seeking to profit from the anticipated short-term downward movement in Aave's price. Given the price trends and forecast for EOS, a moderately aggressive investment strategy would focus on a short to medium-term approach to capitalize on the anticipated price fluctuations. The historical prices show a recent upward movement, but the forecast indicates a potential decline in the coming weeks. The support price sits at $0.7446, providing a potential floor for the price, while the resistance level is at $0.8697, suggesting an upper limit for the current upward momentum. Considering this information, a long position with a moderate risk appetite seems suitable. The entry price could be set at $0.790, slightly below the current price and close to the support level, allowing for a potential entry point if the price dips. The stop loss should be placed at $0.775, below the recent lows, to protect against significant downside movement. The target price could be set at $0.840, aiming to capture a portion of the potential upward movement before the predicted decline. This strategy aims to profit from both the short-term upward momentum and the potential for a bounce off the support level, while minimizing risk through a well-defined stop loss. Given the price trends and forecast for Tron, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend in the past 2 weeks, with the forecast indicating further declines. The support price sits at $0.2048, indicating a potential floor for the price. However, the resistance at $0.2531 suggests limited upside potential in the near term. The forecast suggests Tron could drop from its current price towards the support level, making a short position potentially profitable. Therefore, for a cautious short-term investment strategy, an entry price of $0.251 would be suitable, aligning with the current price and the forecasted decline. The stop loss should be set at $0.2531 to protect against any unexpected price surges. The target price should be set at $0.2048, aligning with the support level, allowing you to take profits before the market potentially hits major support. This strategy aims to capitalize on the anticipated decline in price while minimizing potential losses. Based on the provided price history and forecast for Suncoin, a cautious investment strategy is recommended. The recent price history shows some volatility, with prices fluctuating around $0.024. The forecast indicates a potential downward trend in the coming week, suggesting a bearish outlook in the short term. Given this, a short position seems more suitable to capitalize on the anticipated price decline. An entry price of $0.0246 aligns with the current price and the forecast, allowing you to enter the trade near the expected turning point. The stop loss should be set at $0.0258, slightly above the recent high, to protect against any unexpected price surges. The target price could be set at $0.0233, a level below the recent support price, allowing you to take profits before the price potentially rebounds. This strategy focuses on a short-term investment perspective, aiming to profit from the anticipated price correction in the near future.